to have you guys here. But we will go to Julian in a moment, and that is weird. Okay, we'll go to Julian in a moment and say hi to him and hear his view on the market. We'll come back to Shukri on the scheduled time into full cross on crypto. Thanks for helping fill the gap for us, Shukri. It was quite useful. Cheers, mate. Look, our next guest is a professional trader, been in the markets now for nearly 30 years, worked throughout Europe. Julian McCree, still in the market. How are things today, and what are you looking at for the week ahead?
Hey, Paul, and hello, everybody, wherever you are in the world. It's always good on a Sunday night to have a quick scoop round and let you know what my thinking is for the following week. And pretty much to give you an idea sometimes about what my thinking is more long-term as well, too. So I'm going to start tonight with the long-term. I think the key things that for me have changed the world almost 180 degrees for me is the swap in Fed policy from really targeting inflation above all else with an eye on unemployment to targeting unemployment with an eye on inflation. And I think that has been a complete shift. If you combine that with a relatively lax government policy compared, it can, when you consider their fiscal policy, let's call it a relatively relaxed fiscal policy in the States, I think there's going to be some very interesting fireworks over the next 3 or 4 years. And one of the challenges is going to be that I think all of that is probably in the medium term dollar negative. However, and let's talk about the second thing. Well, maybe I'll talk about that in a second. Let's just call that dollar negative over the medium term. Now, one of the challenges with that is, I was talking to my wife about it, by the way, at breakfast this morning. This is what we talk about on a Sunday morning, is where she's doing her Sudoku and trying to look interested when I start to go into one of my rants, is that I think the key thing for me is that how everybody else responds. So we've already seen a response from Lagarde at the ECB. I've also seen a response from the local RBNZ, which is the Reserve Bank of New Zealand governor as well too, who's been on the tape saying, actually, hang on a second, we've just had a dual mandate here as well too imposed on us, which is also about unemployment versus inflation. And his description of it, I thought, was very lucid when he turned around and he said, well, I think people would rather have a job and worry about a little bit higher inflation than they would the other situation. So when you look at this, it's really important because, and I know Paul's sitting there with a gold chart up in front of him, the impact is going to be a reach for inflation-based assets and inflation-based hedges for investors over the course of the next 5 to 10 years. However, the however to all of that is that's over the course of the next 5 to 10 years. In the meantime, the Fed's got to generate anything that even resembles aggressive growth and anything that even resembles a sharp uptick in employment and a decrease in unemployment. At the moment, the Fed appears to me to be fighting deflation and not inflation. So with that caveat having been said, we're now sitting, I think, on a quite interesting juncture in that let's look at the gold market to start off with as being our poster child for the non-dollar assets and say the non-US dollar assets. And this chart's been going sideways at what really ought to be or is a very seasonally bullish time for gold. So pretty much the whole of September, late August through September, the gold market should be rallying, and it isn't. It's going sideways. So I'm going to put if you like, a little pin in my expectations of where I think the gold market ought to go. Watching the price action incredibly closely, I have a real passion to hate triangles, and we're clearly, as Paul's doesn't take 2 seconds to demonstrate, I'm sure if you put a couple of trend lines in, you can see that triangle forming there. And I hate them with a passion because I think they're so difficult to trade. So subsequent to that, what we're going to do with gold is we're going to do something called watching it. And we're going to wait until something happens. I have a bias to be long because the seasonal is supporting that at the moment. And this is one of the most seasonally bullish times of the year for gold, the next week or two. So I'm really conscious of that. But I'm also conscious that we're in a triangle, and triangles are nightmares to trade. So we'll see what takes place. So watching it like a hawk. And I think that's the message I want to bring to this week, right? We've got the FOMC, which is interesting. And Paul, if you could put a chart of the euro up after that, and maybe we'll just go to that and have a quick look at the euro. You know, what we need to really do here is to try and say, okay, well, we're very aware that from a commitment of traders report, and also really from just a little bit of sentiment as well too, that we've got a market that's been rallying like crazy for a very long period of time in the euro, and it's just recently put what you may call the potential for a topping action in place. Certainly this consolidation has been quite, I guess, not necessarily boring to trade, but it's been difficult to believe that there's a follow-through trend coming from here to go again. It probably risks more either further consolidation or a move down. So given where the commitment of traders is sitting and the commercials are very short across a number of different currencies, I can only really believe that at this point in time, I'm looking for either false breakouts to the downside or a stronger trend to the downside on a breakout point of view. So I'm looking for a failure. I'm looking for the US dollar to rally. And that's my thesis for the next week or two, certainly the next 2 weeks for sure. And we'll see how that spins out. And that's just not in the euro. That's also in dollar CAD. It's also in some of the other currencies as well too. You've already seen sterling come down this week, or so the cable rate. So sterling US dollar has come down dramatically this week. In other words, the dollar has strengthened significantly. And I think there's a risk. Here we go. This is dollar CAD. There's a risk here that both dollar CAD and the euro fall. So dollar CAD will rise. The euro will fall from its current 118 down towards that 114, 115 level. And I think it'll go quite quickly as well too. But when it goes, it'll go quickly, but I think it might take a few days to get going. So the FOMC, post-FOMC could be the trigger for that to start happening. I don't think anything's going to happen before then. I might surprise me, but I suspect not. But just keep a very strong lookout. Now, then the question is, which one is the most bullish for the US dollar? And I would probably punt that one, Paul. Thank you, which is the dollar CAD. Will be the one that I'd be looking at. Again, this is really straightforward. You know, from the price action that you can see there, any type of break of that large green bar, the higher of that large green bar is pretty bullish and will walk us all the way back to at least double the range of that bar, which would be up at about 134-ish, something like that, as being a target point to get to. So that's quite a fair way from here, right? Yes, vaguely something like that. That's potential, right? So up in the 135s as well too. You know, I don't want to call levels because I always hate trying to predict where price is going to go. We'll just see what happens when we get there. But I think the opportunity for reversing the dollar is pretty strong over the next 2 weeks. So there's my thing, Paul. When I look at other markets that I think are really interesting, do you have platinum on this, Paul?
Yeah, look, I do, Julian. Someone might need to just jump in the box. What is it?
XPT.
There it is, XPT. Let me open it. I've
just come
off my desktop onto my laptop for this show, so I can have a camera and a few other things. And it just means that I don't have anything set up. I've just put this on.
Don't need it. Just a weekly chart's great for me.
A weekly chart on platinum.
Yeah, thanks. Okay, so what we're entering now, and the reason why I've put this up, what we're entering now. Is the seasonally most bearish time for platinum of the whole year. So why is that important? Well, platinum is a precious metal, and as platinum goes, often gold goes. Again, if nothing happens to platinum over the course of the next 2 to 3 weeks, then you sort of go, well, that's interesting and not very useful. But from my perspective, I'm also looking for platinum to come off quite aggressively because the seasonals are very bearish this time of year. And the commercials are also short, so there's probably a bit of a 1-2 there that we'll see unfolding. So maybe it might not be gold that suffers; it could be some of the ancillary ones around it that suffer. And I guess the other thing that I'm also looking for as well too is a follow through on the initial sell off in the NASDAQ. We've been talking about being nervous about equities for a couple of weeks now. Actually, more than a couple of weeks, more like 3 or 4.
Sorry,
this is a crazy.
I was just posting something. NASDAQ, right?
if you have it.
There it is, mate. NASDAQ is there for you, mate. A little 4-hour pattern short at the moment, isn't there? Interesting on the NASDAQ.
It is, and I suspect we're probably going to, because this is an index, we may end up bouncing. We'll probably try and find some support somewhere. It's probably going to be around about here. This is a pretty busy area for support and resistance. Who knows? Because the NASDAQ is the NASDAQ. But I would suspect a bounce from here, and I think that bounce has got to be sold. What worries me is that we don't get a bounce because there's something more serious happening on the downside, which then suggests that we're experiencing the beginning of a blow-off top in the stock market, certainly the tech stocks. So bear that in mind. I haven't seen the exact numbers, but I believe Tesla's off something like 30% from the high. It's not a investing market when things move 30% in a week or 20% in a day. That's not investing, that's trading. And, you can't hold a position in Tesla stock for years and years if you're going to have that type of volatility occurring over 2 days. So you just can't. So just bear that in mind. And we do see this happen from time to time in the stock market. For those of you that remember the cannabis stocks of a few years ago and Beyond Meat, so the meat replacement stocks of, I think that was last year's rally. This year it happens to be Tesla and one or two others. It's made them into quite large companies, which I think is an outrageous valuation for Tesla. I absolutely love EVs and I'm a massive fan of them. I have 2 of them myself, but I do not believe in the price of the stock being anywhere near this type of valuation metric. I just can't make any sense of it at all. So yeah, that's a slight aside, but I think that also plays to that dollar strength as well on people when they get a bit worried tend to buy US dollars. They might not buy the individual stocks, but they might buy US dollars as a flight to quality. So just bear that in mind. So,
sorry, Julian, a blow off top. What's a blow off top?
A blow off top is just, well, Paul, if you'd like to expand the NASDAQ out to a weekly chart or a monthly chart, I'll show you. A blow off, we might have to go a little bit further back than that. Have we got there? There we go. So a blow off top is exact. So don't forget, this is a arithmetic chart, not a logarithmic chart. So if you look at that move we had in 1998 and 2000, where the market went from 4,000 down to 400, so it lost almost 85% of its value. That's what a blow off top looks like. So that's just saying that the NASDAQ from here is going to go down to 2,000.
So what you're saying with the NASDAQ here is that the real danger here is this kind of pattern where we see on a decent time frame this lower high and quite a decisive move off it because it just
correct.
So
we're a long way from any type of that type of price action unfolding, right? Months. It could take months for that to happen. And what we do know, and these are the key things, is that a lot of the rally in the last 5 months has been driven by a number of large players investing in significant amount out of the money call options. Everybody's, I don't know how much your guys know on this show, right? Because we tend to focus on foreign exchange, but there's been some wild and wacky things going on in the US stock market around call option buying. So out of the money calls by a lot of private individuals and also some large players as well too has led to the rally of the last 3 months. And so think about the average volume over the course of a year, I think being about $100 billion. I think this year it's running at $300 billion in those call options. So massive factors of volume different, and that's caused this market to rally.
Okay, mate, that's sorry, mate. Can you give a really short explanation of a call option?
Yeah, so a call option is the right but not the obligation to buy something at a particular price. So it's a bit like saying the price of Tesla today trades at $300. I'm going to buy a call option at $350 for 3 weeks time. If the price in 3 weeks time is $400, then I'll exercise my right to buy at $350. If the price of Tesla is $300 in 3 weeks time, then my option is, if you like, out of the money, so to speak, and I'm better off buying at that lower price. So because I have that right but not the obligation, I pay a fee for that, a premium for that up front. And that premium is the key factor behind what that option is worth. Well, it is what the option's worth, and That premium is based on a number of things, but most notably the distance from the strike price, so and the current market, and also the volatility in the market moment. So you can understand with these type of price movements that you're seeing on the screen, the market's quite volatile in some of those single stocks. We use Tesla as the example. I think it's running at about 40% in Tesla, which is quite high. And
Yep.
it's that prices up those options quite aggressively.
Okay, man, I like that. We might do a bit of stuff on options not far away, Julian. We're talking to a guy to come in and chat about options. But look, I know that next Sunday, you and Ainsley are doing a couple of hours with the mentorship students from both organisations, all levels of mentorship students, a couple of hours for free before this show. My recollection is about 4 p.m. till 6 p.m. Sing, have I got that right?
I think you have. And
2 p.m. to 4 p.m. Sing. 2 p.m. to 4 p.m. Sing. Finishing at 8 New Zealand, aren't we?
Yes.
To get ready for your one-to-one coaching session, right? One of the things, I know you've got a couple of topics, but this options thing and how to hedge the forex business will be an interesting chat. I don't know if you can do it in that one, but we do need someone to come and talk to us a bit more about how to options and future strategies around sitting in with your forex trades.
Yeah, look, there's quite a there's a heap of ways to look at options. Some of them can be quite dangerous because it requires you end up betting quite a bit of capital. Yeah, the returns sometimes are amazing. This is how people turn $15,000 into 15 million in 20 seconds type of thing, and I do get all of that. But actually, what tends to happen, interestingly, is most traders tend to fall into one or two camps. They either trade options and they love them, or they just leave them alone and just trade the straights, as we call them, which is the underlying instrument, because that's fine for them when they've got all the price action and the trading success they need just looking at those. So I've looked at options late on in my career. I wasn't an options trader early on. I'm a relative fan now, but I think it comes with a lot of yes, and it's a very dangerous game for the beginner.
Mate, I've got a question from Dominic. I'll read it to you quickly. The elections this time around seem different. What is your take on it, and how will it change the game on dollar and the S&P? Now, Julian, if you can let us know that we'll all just go and place our positions now and become millionaires in the next 5
exactly.
Yeah.
But I am making the assumption you're not talking about the New Zealand election, you're talking about the American one.
I think he's just being polite. We all know New Zealand election's the big one coming up, but there's the other one as well.
I think there is something happening in November. I just don't recall what it is. This time around, the answer is we probably need to focus on it much more than we usually do because it's quite important. As a trader, elections used to be really boring for me. Who cares? Because the Fed's the only people that matter. This time around, that is not the case. There's a structural and secular shift in government policy going on, and there's two camps about how that should unfold. The Republicans, the Democrats, and therefore you've got to be across it because there will be policies that come out of both camps which will be markedly different depending on who wins.
Look, I think as traders as well with this stuff, Julian, you've got to be really aware of the world that you live in. If you start Googling and searching or Facebook searching, reading, for instance, anti-Trump stuff, they will keep running that down the feed to you. And you will get a feed which is distorted in favor of the opinion you have in the first place. And you will take into this election beliefs which are supported by articles which support your belief and aren't impartial. It's really important if you are looking to follow this election that you find a way to see if you can get both points of views or some balanced points of views and this kind of stuff, because otherwise your social media and your news feeds will simply reaffirm what you believe. And that is a dangerous place for a trader to be. It
is, Paul. And look, I've got another, this is very interesting. But is it going to make? I keep coming back to the same thing in these debates about the election. Is it going to make us any money? And from my perspective, I don't have a political edge. I maybe after 20 years of looking at markets and having an economics degree, I've got a small sense about what might be coming next. But that doesn't affect my trading decisions on the week.
It's tough in the election, isn't it? Helen was just asking what you meant by, let me see if I can bring this up again. So my chat box, as always on Zoom, just disappears. What does Julian mean by structural and secular shift? Julian, what you're saying is there's going to be there's a change in the policy and the way the country wants to be run, right?
Correct. So this won't last months, it'll last years.
And the big question facing the world really is, when you borrow money from your own reserve bank, are you able to renegotiate those positions and lengthen those loans, perhaps write some of them off? And will countries choose to do that in the future? It's going to have a massive bearing on things moving forward, and that's a debate that I don't think that the world will even have for another year. We've got to borrow the money first and try and get out of this situation we're in globally.
Yeah, you're absolutely correct, Paul. There's a difference between relief borrowing and borrowing just for the sake of it. They're two completely different things. I'm pretty certain at this point that most governments around the world, the minute the economy recovers, will stop borrowing additional money.
While I think that's completely right. The thing for mine, and I just wonder this, is will they pay it all back? And or will they just stretch these 10-year bonds out to 30-year bonds or 100-year bonds and just push these payments out at nearly no interest rate over a massive period of time to soften the upcoming tax blows? And as long as people are going to elections saying that there's nearly no tax change coming, I don't think they have a genuine belief, a genuine intention right now to pay those bonds off in the time frame that they're borrowed in.
Again, it's an interesting point, and I always say with these things, governments are cheapskates, right? So they will look at the 2-year rate and they'll see 1%. They'll look at the 10-year rate or the 30-year rate and they'll see 3%. And they go, holy crap, well, I don't want to pay 3% interest on this. I only want to pay 1%. So I'll just borrow it for 2 years. So I think you've got to always be conscious that governments are rational actors at the same time. Well, vaguely rational actors. No, actually, they're not really. The Treasury is a rational actor. Nobody else in government is. Sorry, walking back from that statement really quickly. The Treasury is quite good.
Yes, agree.
And I think that following on from the Fisher article that came out in 2018 by the Fed, I think the Fed is almost working to the Fisher playbook now, which is I expect to see yield curve control coming in on the bond markets out to 5 years, similar to what the Australians have done, and a real meaningful shift in the way they look at inflation, right? So they don't care if inflation's 5, they really care if unemployment is 9%.
Yeah, it's a different world, isn't it, Julian? I mean, inflation's good for the borrowing, unemployment's good for nothing.
Yeah, just remember that 5% inflation over a 10-year period and 5% inflation per annum is not really a lot. Is going to depreciate that whole debt that they have by 60%. Yeah. You solve a lot of problems in that time.
Yeah, you really do. It'll be interesting to see if we get it. I'm a believer that we're heading for it, and we'll wait and see whether we do or not. Mate, I'm just having a look at my timetable. I'm a few minutes away from supposed to be with Shukri and Ainslie and soon to Lloyd. Any final thoughts? I wanted just to confirm for people who are listening that you are doing you and Ainslie doing a free hour next Sunday with the mentorship students. Details of that will come out on Monday and Tuesday straight into the mentorship chat areas. You've also got your coaching session where you're coaching 4 individuals. You coach 4 individuals a month, and we do have one spot on that for anyone that's interested. Well, you can. We'll talk about that next week as well, right?
Yeah, absolutely. We don't. Paul and I, we've talked about this a couple of times, and we launched that mentoring program, the coaching program this year. I don't do this very often. It's something that I've got a bit of bandwidth for this year, and I've trained and mentored probably walking to the hundreds of students, but let's call it tens for sure, over the course of the last 20 years. And I think pretty much most of them have benefited from this. So it's not something, this isn't a program which I run very often. But like I said, we have a bit of bandwidth this year, so we're doing it. And I think the people who've been on it this year have really benefited so far. And I hope they have anyway. My sense is in fact, I know they have, because we've just finished a session now and it was a completely different set of people compared to the ones that we were looking, same people, but compared to where we were 3 months ago, completely different way of thinking and totally professional, much different to those people that came to see me 2 or 3 months ago. So I'm stoked for them because they're turning into professional traders, which is awesome.
That's what it's all about, isn't it? And I guess the two people you've mentored inside this organisation are myself and Ainslie, and I think that puts you in a pretty good place. And I know you've done plenty of others, and the group you've got at the moment are pretty happy. So we do have one spot, and we will get more information out about that next week, and we will have a decent chat with you, Ainslie, and the mentorship students next Sunday afternoon. So if you're a mentorship student, please block out some space for that. Again, I think it's like I'm sorry, I do these things in New Zealand time. I think it's 2 p.m. to 4 p.m. Singapore next week for that. And Julian, cheers, mate. If there's anything else, if you want to jump into anything along the way, feel free to jump into anything else along the way.
No worries, and thanks for the time, Paul. Thanks everybody for listening.